Novo Nordisk stock is continuing to get worse each and every day as the stock keeps falling, and it doesn't seem as if there is any bottom for this stock, in which they just also had their earnings report where they missed on both the top and bottom line. So with that being said, with the stock down nearly 5% today, I'm going to be analyzing Novo Nordisk stock today and also taking a look at that recent earnings report and using my intrinsic value calculator in order to determine the fair value price of Novo Nordisk and to see if we would be willing to pay today's price and to see if we can make a good return on that investment. So with that being said, let's get into Novo Nordisk as a company. Taking a look at Novo Nordisk, as we can see here, Novo Nordisk is down nearly 5% today at $45 per share, and this company is just continuing to tank with a market cap of $154 billion and a PE ratio of only 12. Plus, look at that nice dividend right here at 3.7%. So this company has a really nice dividend, and right now it's actually at its 52-week low. So this company just continues on going down every single day, but the 52-week high is at $140. So this stock is down almost 70% since its 52-week high. So there seems to be no slowing down in this stock going down, and I don't know if there's ever going to be a bottom. It just doesn't seem like it, but there has to be a good time to buy this company, and that's what we're going to be figuring out. And if you don't know what Novo Nordisk does, their main drugs focus on diabetes care and obesity management. So they're a drug company based in actually Denmark in Europe regions, but they also do sell it all over the world. So also their key medications include Ozempic and Wegovy, which are the main two that people probably know of, and those are weight loss drugs. So they basically make drugs for weight loss and diabetes, like it says here, and they all contain the active ingredient of semaglutide, which helps those conditions. So with that being said, let's take a look at that earnings report that they just had this morning. And taking a look here, Novo Nordisk stock was down obviously pre-market, where they missed on top and bottom lines. And as we can see here, they also announced a downward revision in its 2025 guidance, which is not a good sign for Novo Nordisk. You never want to see a company reduce their guidance for the future. And taking a look at the revenue, they reported $11.95 billion compared to $11.97 billion expected by Wall Street. And it also reported earnings per share of 93 cents, missing by 2 cents, with analysts expecting 95 cents. The GLP-1 maker of diabetes drug Ozempic and weight loss drug Wegovy reported sales were up 16% year over year. So while the company is missing on earnings and revenue, they're still growing at a very fast pace at 16%. So that's still really good, but the problem is the reduction in that guidance, where they reduced it from 13 to 21% all the way down to 8 to 14% in this year. So this company is continuing to cut their guidance, which seems like a pretty big problem with Novo Nordisk. And also they are having a lot of lawsuits against other compounded weight loss drugs that are using semaglutide as an ingredient. So maybe that could help the company out here. But the operating profit increased by a whopping 25%. So this company is still continuing to grow at a pretty decent rate, and their sales obviously were up 16%. So Novo Nordisk is still growing at a good rate, but I think the problem with this company is the future competition and if they can still sustain the growth rate. That's the biggest problem with Novo Nordisk in this company, because they do have a great drug that can help people, and a lot of people will be using this in the future, especially as obesity has continued to grow throughout the United States and the world. I think this is still a really good drug, but I just think the problem is the amount of competition in this company. And taking a look at all the competition, we have Eli Lilly, which is a really big player in this space, where they're also making weight loss drugs competing against Novo Nordisk. Also, we have copycat drugs that are using the same version of GLP-1 drugs, but with the semaglutide at a cheaper price. So that's another problem with Novo Nordisk. They're selling it for cheaper than Novo Nordisk, and it's basically the same thing. And then also there's other competitors that are trying to get into this space, like Roche, Pfizer, Amgen, and Viking. So So basically every single big drug company is trying to compete in this space because obviously weight loss is a huge space for the future where it's a lot of money to be made. So every drug company is obviously going to try to get a piece of a pie. And right now, Novo Nordisk is leading that charge, but in the future, that's the problem that it's having, and I think that's why it's trading at such a cheap valuation. But a pretty interesting fact here is that Novo Nordisk was actually in a relationship with Hims and Hers, so they had a partnership where Novo Nordisk in April 2023 with Hims and Hers, where they aimed to make Novo Nordisk weight loss medication Wegovy more accessible to patients, where Hims and Hers is like a telehealth company where they could sell on their website. However, they just recently terminated that deal in June 2025 because they were accusing Hims and Hers of going against FDA guidelines, and they were selling a wrongly compounded version of Wegovy. So that is a bit of a problem. Hims and Hers, however, did fight back and said Novo Nordisk is actually using deceptive marketing practice in order for people just to buy their drugs. So this is a pretty big battle between these two companies, but nonetheless, it's not that big of a worry for the future. But I just like to add that because it is kind of a big deal, because Novo Nordisk with Hims and Hers actually helped both companies out, but without it, it's actually hurting both companies in the future. So that's just a thing to keep in mind with this company. And taking a look at the revenue, we can see the revenue continues to increase every single year at a pretty decent rate at about, I'd say 15 or so percent, I'm pretty sure, but we'll take a look at more of the financials of this company. But the revenue with this recent quarter, they reported about right here with $11.95 billion in revenue. So it's still increasing quarter over quarter. Obviously, we saw a decrease just in that last quarter, but this quarter, it's still increased fast. And year over year, it's still increasing at a very fast rate at double digits. So this company is still a growing machine, but the problem is, once again, is the competition going to be too much for Novo Nordisk? Also, the EPS right here. The EPS is also continuing to grow at a decent rate, and it did go up quarter over quarter. And this company keeps making record earnings per share and almost record revenue. So this still looks good for Novo Nordisk, but we can see the revenue and earnings per share growth rate is starting to slow down just a little bit over the past few years because of that increased competition. So that is the biggest worry with Novo Nordisk. Once again, that is the absolute biggest worry with this company, and also their pricing power. And taking a look at the PE ratio, right now we're at a very low PE ratio. The PE ratio right now is actually under 12, in which it hasn't even been here since 2017. I don't even think this might be almost a record low PE ratio for Novo Nordisk, even though the company is actually growing at a faster rate than it was back in the 2010s. So with that in mind, the valuation looks very intriguing to me, and honestly, it could be good if you expect Novo Nordisk to continue to grow in the future. This would be a perfect time to be buying this company. And taking a look at the financial health of Novo Nordisk using my 7-step stock analysis, we get 6 out of the 7 key metrics as check marks. The PE ratio is greater than 0, meaning the company is profitable, and at a 12 PE ratio, this is a very cheap valuation. With the market at a 25 average PE ratio, this is more than half of the value of the market, so it's trending very cheap. Also, the forward PE ratio is less than 30, meaning with this company, you're only paying $11 for $1 of future earnings per share next year. So this is a very cheap valuation for Novo Nordisk, especially when looking at the past growth of this company with 19% revenue growth and 21% EPS growth. And then the shares outstanding, they continue to buy back shares, which is a pretty good green flag to me. I kind of wish they would buy back more shares and potentially cut that dividend, because dividends and buybacks basically give you the same return. The only problem is dividends get double taxed. So with a company like Novo Nordisk, they make, say for example, they obviously make the money net income, and they pay off that, they have to pay taxes. But now when they pay that dividend, you'll also have to pay more taxes. But if they bought back shares, then they only pay taxes once on when they actually made that income. So actually, it's more tax efficient to buy back shares than pay dividends to get a greater return on your investment. And debt to equity ratio at 86% is the only worry for me. The debt's a little bit high for this company, but it's still not terrible. At least the debt isn't more than the equity. And also, analysts still expect this company to grow at 13% each year. So it still seems pretty good for Novo Nordisk, and I like this about this company. But now taking a look at my intrinsic value calculator here, I have to do future assumptions of the annual revenue growth rate first. So they're expecting to grow at about 8 to 14% over this year. So with that in mind, in the next 5 years, I still see the growth slowing down because of increased competition. But I still think on the bear case, we could see probably, let's say 6% growth. And then for the base case, I think we could see almost 9% growth, I believe, with this company. And for the bull case, say they really start to get selling those weight loss drugs even more, and they just start marketing it very well, I think they could potentially grow 12% over the next 5 years. Now for the future profit margin, right now their profit margin's at about a 35%. However, I do think that this profit margin will decrease in the future just because of increased competition, and they're going to have to lower prices probably. So with that being said, I think a bear case would be a 30% profit margin. The base case, I'll say a 32.5% profit margin, and the bull case, I'll do what it is today. I personally don't see this company increasing their profit margins at all in the future, and that's just what I believe. Now for the future PE ratio, their PE ratio average was actually in about 15 to 20. As of right now, it's less than 12. So I think they do deserve a better PE ratio, and I think with a 6% revenue growth in this company, although they don't have a big moat at all, it's one of probably the worst moats because all of the other big drug companies are trying to get in this space. It's going to get really diluted in the future, so I don't think they deserve a huge PE ratio, but I think a PE ratio, since the market trades at about a 25, I'd say for the bear case, a 15 PE ratio is fair. And for the base case, I'll say an 18 PE ratio. And for the bull case, a 21 PE ratio if they somehow grow 12% each year for the bull case. Now for the shares outstanding, they're decreasing at about 1% each year. So with that in mind, I would say they'll decrease about 0.5% for the bear case. And for the base case, they decrease by 1%, and then for the bull case they decrease it by 1.5% each year. And with this being said, I actually get a pretty decent valuation for Novo Nordisk, where for the bear case I actually get almost an 8% return, and for the base case I get 17.5% return, and for the bull case a 27% return on your investment. So with these annualizations, I think you could make a good amount of money. I just think my biggest problem is in the future, it's going to be a lot of dilution in this space, and if they can survive and continue to thrive with these weight loss drugs, then you can make a lot of money. But the only problem is, once again, I think the problem is just so much competition in the weight loss space that they're going to decrease in profit margins and the revenue is going to decelerate over time. And honestly, I don't know if this is going to happen, but if you do believe these base and or bull case, this looks like a very good investment. If you think they can grow, even let's say they grow at 7% here in the base case, you could still make 15%. If you think they can grow their revenue at 7% and even reduce their profit margins by 2.5%, and then a future PE ratio of 18, this still looks like a buy. And even if you put the PE ratio to 15, it still probably could outperform the market if you truly believe this could happen. So honestly, this company looks pretty decent with the valuation, but I am just still worried about the competition in the future with this company. So I would say do more research in Novo Nordisk, and I think it could be, once again, with this valuation, it looks really good. So thank you guys for watching this video on Novo Nordisk, and please subscribe, get us to 2,000 subscribers, hit the like button, comment down below what stocks you want me to analyze next, and tell me some feedback on this valuation. And please give me some feedback on this valuation to help the channel and help me learn too. So thank you guys for watching. See ya.